What is up guys, my name is Ignas, welcome back to the channel. So recently we have been doing dividend comparisons in the industrial sector. We already picked several for the portfolio. So for freight and logistics we have FedEx, ticker symbol FDX. And then from the heavy machinery industry we picked Caterpillar, ticker symbol CAT. These two are already parts in my dividend portfolio, and we'll take a look into it further later on. But now I would like to take a few picks from another industry I'm interested in, and that is one with quite a few names, aerospace and defense. So we will be comparing three large dividend-paying names from it. The first pick will be Lockheed Martin, ticker symbol LMT. The stock has been surging recently, and on the year to date it is now up for 36.83%. And then zooming out to the last 5 years, it is even better, where the stock is up by more than half, higher for 56.41%. Lockheed Martin will be the largest pick for today's comparison, with a market cap of $127 billion, and the stock is now trading at a dividend yield of 2.47%. So this is the first name I've picked, but there are two more we're putting against it. So second name for the comparison is Northrop Grumman, ticker symbol NOC. This year the stock has been moving higher consistently, up for 42.17% on the year to date, and zooming out to 5 years it is even better, close to 2xing, up for 81.70%. Market cap is under $100 billion at 84.8, and the dividend yield is lower than Lockheed's at 1.26%. So these are the two names for today's comparison, and now let us add the third one. That will be General Dynamics, ticker symbol GD. On the year to date the stock is up for 20.85%, but unfortunately zooming out to 5 years that is not much better, with the price going higher for 22.87%. Now this is the smallest company of the three, with a market cap of $68.8 billion, and the dividend yield is now in between at 2.01%. So these three will be the picks for today's dividend comparison in the aerospace and defense industry, and to make that happen I've prepared a table in Google Sheets. So in order to make this dividend comparison possible, we'll use 5 different metrics: dividend yield, dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. We'll take the numbers under each metric for every name, add them into the table and compare them in between. The best stock under each metric will get a point, then we'll sum the points up, and in the end the stock with the most points will be considered the winner of this dividend comparison. I hope that the rules were clear, and early thumbs up would be very much appreciated, and with that out of the way, let's start. So the first metric that we are comparing is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Lockheed Martin is paying an annual dividend of $12 per share, so at a stock price of $484.87, we here have a dividend yield of 2.47%. Now second is Northrop. They have an annual dividend of $6.92, so at a price of $540.11, this is here a dividend yield of 1.26%. And lastly, General Dynamics. Their dividend is at $5.04, so at a price of $250.72, this is a dividend yield of 2.01%. Second metric we are comparing is the dividend payout ratio. The percentage here shows what part of company's earnings are being paid back to investors as dividends. So in Lockheed Martin's case, the dividend payout ratio is at 43.93%. This means that just a bit more than 2/5 of company's earnings are being used to pay dividends. Now for Northrop, their payout ratio is at 28.28%, so they are paying just a bit more than 1/4 of their earnings as dividends. And then General Dynamics has a dividend payout ratio of 35.94%, so just a bit more than 1/3 of their earnings are being used for dividends. Now metric number 3 is the number of years with consecutive dividend increases. So for how many years the company has been increasing dividends for at least 1 quarter every year. In Lockheed Martin's case, they have been increasing dividends consistently for the last 19 years. Now Northrop Grumman, and they are just a bit behind Lockheed, with 18 years of consecutive dividend increases. And lastly, it seems that General Dynamics is in the lead, as they have been increasing dividends consistently for the last 25 years. Metric number 4 is the compound annual dividend growth rate. For this comparison, we'll take the 5-year average, including the next year's estimate. So in Lockheed Martin's case, the 5-year dividend growth rate is at 7.91%. Switching to Northrop, and their dividend growth rate is at 8.04%. And then lastly, we have General Dynamics, with a compound annual dividend growth rate of 6.26%. Now the last metric is the dividend yield compared to its 5-year average. And for that we'll use my dividend investing watchlist on Google Sheets. So we are now in the watchlist, and here is the tab for Lockheed Martin. We have its dividend yield history of the last 5 years, and on average the stock was trading at a dividend yield of 2.55%. So the worst time to get in was back in 2018, with a dividend yield of 2.15%, which is under the 5-year average for 15.62%, and the best was by the end of 2021, at a yield of 3.14%, over average for 23.23%. But if we would be getting into the stock right now at a dividend yield of 2.47%, that is unfortunately just a bit under the 5-year average for 3.06%. So this is here the number that shows how the current dividend yield stands against its 5-year average. And we'll use that for the dividend comparison. Now let's take Northrop. We have its dividend yield history of the last 5 years. And on average the stock was trading at a dividend yield of 1.53%. So the worst yield was back in 2018 at 1.19%, under the 5-year average for 22.10%, but we saw the best one in the beginning of 2021 at 1.97%, over average for 28.96%. But if we would be going into the stock right now at a yield of 1.26%, that is now quite there under the average, minus 17.52%. Now we are in the tab for General Dynamics. We have its dividend yield history of the last 5 years, and on average the stock was trading at a dividend yield of 2.25%. So the worst yield was in the second quarter of 2018 at 1.57%, under average for 30.07%, and best one was in the second quarter of 2020 with exactly 3%, over average for 33.62%. But if we would be taking the stock right now at a yield of 2.01%, that is under the 5-year average for 10.48%. So now we do have the numbers that we needed for our comparison. If you would be interested in doing a similar analysis on another dividend-paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add the ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities available in the market that I'm still missing. So we went through all 5 metrics and the numbers in our table are in. Now we can start assigning points. Lockheed Martin gets the first point with the largest dividend yield at 2.47%, a point to Northrop Grumman for the lowest dividend payout ratio at 28.28%, General Dynamics gets a point for 25 years of consecutive dividend increases, a point to Northrop Grumman for the largest compound annual dividend growth rate at 8.04%, and the last point goes to Lockheed Martin, with its dividend yield being 3.06% under the 5-year average. Now that the points are in, we can calculate results. Lockheed Martin got 2 points, Northrop Grumman 2, and General Dynamics 1. This means that we currently have a tie between LMT and NOC. So for now let us remove GD and reassign that point elsewhere. So Lockheed Martin gets 1 more point for 19 years of consecutive dividend increases. After calculating, LMT now has 3 points, NOC 2 and GD 1. This means that Lockheed Martin is now considered the winner of this dividend comparison. So I will consider adding Lockheed into the portfolio, though I already have 3 names with 3M, FedEx and Caterpillar. Maybe since the stock has been surging recently, we could wait a bit for a better entry further on. What do you think, which aerospace and defense stock should we be buying into right now? Share your preferred ticker in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Now last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.